Good morning, good afternoon, and good evening. This is plenary from ESCAP Statistical Institute for Asia and the Pacific. I extend a warm welcome to this webinar. Thank you very much for making your time to attend this webinar, which is jointly organized by International Monetary Fund, IMF, and United Nations Statistical Division. Macroeconomic statistical standards are regularly updated to reflect the changes in the economy. Yesterday, we delved into the main objectives, priorities, and procedures for updating the balance of payments and international investment position and system of national accounts position, national accounts manuals. The session also included joint lectures on building blocks, globalization, digitalization, and communicating and disseminating economic statistics. Today's focus in this webinar will be 2025 System of National Accounts. Before we proceed, I would like to remind everyone a few housekeeping items. You are encouraged to post your questions in the chat box or digitally raise your hands to engage directly. This is an excellent opportunity for all of us for active participation and learning. Please don't be shy and not hesitate to join the discussions. Without further ado, let us begin with an overview of the 2025 SNA and its main changes. It's given me a great pleasure to introduce Pete Harper, the SNA Update Project Manager, who will lead us through this session. Pete, over to you.
Thank you very much, Pinar, and I'm going to share my screen. Can you see that slideshow?
Yes, thank you.
Excellent. Thank you very much. And yeah, thank you for the opportunity to present at this seminar. And yeah, good morning, good afternoon, or good evening, depending on where you are. Yeah, as Pina mentioned, I'm the Update Project Manager. I'm an Australian. That's why I sound the way that I do. And yes, I'll be giving this presentation on an overview of the main changes that will be made to the 2008 SNA. You will see at the bottom of this first slide that there is another name here, Peter van der Ven, and Peter is the lead editor for the update, and Peter and I obviously work closely together, and we put this presentation together even though it will be me who will be making the presentation. I think it's maybe 3 o'clock in the morning in Europe where Peter is, or something like that. So he'll be fast asleep at the moment. So in terms of the presentation, I'm going to cover two broad areas. Firstly, I'm going to look at the recommendations for conceptual changes. And then secondly, I'm going to look at the recommendations that require either additional tables or data items. Before I do that though, I thought it would be useful to show you this overview slide. I'm obviously not going to go through everything on great detail, but this provides, if you like, a helicopter view of all the changes that will be made in the 2025 SNA. You can see that towards the left of the middle of the slide, there are a few changes that are shown in brown. Those are the conceptual changes that we'll be making to the SNA, and I will talk a little bit about those in more detail later on in the presentation. Then you'll see a range of columns to the somewhat to the right in blue, which involve those changes that require additional data items or tables in the system. And then on the far right, you'll see some changes, well, not so much changes, but issues that require either clarification of existing treatment in the SNA. So no change in itself is being made, but we're going to make the treatment in the SNA clearer. And those proposals in green on the far right are things where new guidance is required because we're dealing with emerging economic issues that weren't around at the time of the 2008 SNA. And if I go over onto the next page, you will see that there are quite a degree of proposals that relate to clarification and guidance. I'm not going to talk about those changes in the presentation. They will probably be touched on in some of the other sessions. But if you want to go to more detail about any of these proposed changes, there's a rich repository of material that's available on the SNA update website that explains all of these changes in more detail. But moving on now to the recommendations for conceptual changes. Before I step through the changes in detail, I'd like to make a few general observations. And the first is that there's only a limited number of conceptual changes that affect the key macroeconomic indicators, such as gross domestic product or net domestic product, government deficit, and net worth. And those changes are listed on this slide. Firstly, in the 2025 SNA, we'll be recognising data as a produced asset. And I'm going to talk about all of these in a little bit more detail shortly. The second one's an interesting one, the recognition of marketing assets as produced assets. That was a recommendation that came through the update process, that marketing assets be treated as produced assets in the system. But recently at the 2024 United Nations Statistical Commission meeting, where it considered the proposed changes to the SNA, it did not agree with that recommendation. So that's why it's got a line shown through it. But it is an interesting issue nonetheless, and I will talk a little bit about that later on. There will be explicit recognition of renewable energy resources in the system, and there will be some adjustments in the treatment of biological resources. Importantly, depletion of natural resources will be recorded as a cost of production in the system. For natural resources, in certain instances, we'll be adopting what we call the split asset approach, and I'll talk more about what that is later on. That is a conceptual change because we're splitting an asset in the system, but it's just that, it's split of an asset, so there is no impact on the key macroeconomic indicators that are mentioned above. We're looking at improving the consistency in the application of the sum of cost method. There is some changes to the measurement of the output of central banks, which have a relatively minor impact on the key economic aggregates. And there are other minor changes of a conceptual nature to the 2008 SNA that have no impact on the macroeconomic indicators. But looking at the proposed changes in a little bit more detail, firstly starting off with data, and data has undoubtedly been a big economic phenomena in the last 15 years since the SNA was updated. In the 2008 SNA, databases are recognised as produced assets, but the information content, the data in the databases, so to speak, is not recognised as an asset. In the 2025 SNA, that data will be recognised as an asset. So the information content of electronic data that's collected and used in production will be treated as an asset within the system, a produced non-financial asset. Because we see very few transactions in these data assets, predominantly the valuation of the asset in the system will be made using the sum of cost method. As you know, we use the sum of cost method for recognising the value of assets which are infrequently traded in the system, such as research and development and software. So we'll be taking a similar approach with data. And in the valuation using that sum of costs method, it will include the costs of planning, preparing and developing a data production strategy. Obviously, the costs associated with accessing, recording and storing the information embedded in what's shown here as OPs. They're what's called observable phenomena. And observable phenomena are the real world, if you like, things that we're trying to measure in the data in the databases. And that could also include explicit purchases of this observable phenomena, as well as explicit purchases of already produced data. Costs associated with designing, organising, testing and analysing the data in order to draw information and conclusions from it will also be included, as will consumption of fixed capital. And as an aside, in the 2025 SNA, we won't be using the term consumption of fixed capital any longer. We'll call it depreciation. But regardless, consumption of fixed capital / depreciation, the cost of that, as well as a return to capital, will also be included in the sum of costs for valuing data. By recognising these data as assets in the system, this is likely to have, at least for some countries, quite a significant impact on gross domestic product and net worth. You could imagine countries like, I don't know, Japan or the United States or Germany, where there are large data holdings by corporations. Excuse me, that this is likely to have somewhat of an impact. Excuse me. Sorry about that. Got a slight tickle in my throat. Moving now on to marketing assets. In the 2008 SNA, marketing assets, along with goodwill, are only recognised as non-produced, non-financial assets, and only then when there's an explicit purchase of the relevant assets. Although that said, they could be implicitly recognised within the system as assets when a corporation is purchased at a price higher than its net worth. In the 2025 SNA, as I mentioned, it was proposed to recognise marketing assets as produced assets, which would significantly extend the asset and production boundary, and most of these assets are produced for own final use. But as I said, when the United Nations Statistical Commission considered this recommendation at its recent meeting, it did not agree to it because of conceptual and practical concerns. So the 2008 SNA treatment will be retained in the sequence of economic accounts. And the topic will remain on the research agenda. However, these marketing assets are particularly important in some countries, such as countries like the United States and so on, that have significant activity associated with marketing, and because of that, countries with significant marketing assets will be encouraged to compile extended accounts that do treat marketing assets as produced assets. You might not be familiar with this term, extended accounts. This is what were previously called satellite accounts in the 2008 SNA, are called extended accounts in the 2025 SNA. And by encouraging countries to produce these extended accounts with marketing assets treated as produced assets, we'd be hopeful that the conceptual and practical issues that prevented them from being capitalised in the 2025 SNA will be dealt with in due course, so that I don't know, those who may be responsible for updating the next issue of the SNA can come back and have another look at this issue. And as I said, because these assets are essentially produced for own final use, then they are typically valued using the sum of cost method. But one of the practical issues is delineating the expenditures that lead to the building up of the capital from expenditures which should be treated as current expenditures and not capitalised in the system. The next group of conceptual changes relates to renewable energy resources and adjustments in the treatment of biological resources. As I mentioned, there will be explicit recognition of renewable energy resources in the system, such as those associated with solar, wind, geothermal, etc. This sounds like a bigger change than it actually is. We're not actually going to be valuing the sun or the wind in the SNA. Rather, there's a recognition that there are resource rents that accrue to the producers of renewable energy resources, And these resource rents associated with the production of renewable energy resources will be recorded in the system and capitalised in the form of an asset. Now, in most cases, those resource rents are already captured within assets in the system. So, for example, if you've got a wind farm on private property, then the value of that land would include the value of the resource rents associated with being able to establish a wind farm on that property. So in that case, all that will be happening is that component of the value of the land that relates to the renewable energy resource will be separated from the remainder of the value of the land and labelled as a renewable energy resource. And as I said, that'll be for the most part what will happen. However, when these renewable energy resources are located on land or in the sea, and there's no underlying asset that's recorded in the SNA. So, for example, they might be in publicly owned land that has no other economic value, then we will be creating the asset associated with the renewable energy resource. In regard to biological resources, there's 3 changes and clarifications that will be made to the 2008 SNA. In the 2008 SNA, there's a discrete choice between cultivated and non-cultivated resources yielding once-only products based on the notion of management and control. However, this has been seen difficult to apply in practice. So the 2025 SNA will include a differentiation between migrating resources, which are effectively non-cultivated, such as fish in the ocean, and non-migrating resources, which for the most part will be treated as cultivated, based on a continuum from intensely managed to totally undisturbed. But I would make the point here that if there are natural resources where there's no intent to use them for any economic purpose, then they will not be included in the system because they won't meet the definition of an asset. So when we talk about these biological resources, it's those for where that are either being used in economic activity or where there are plans to use them in economic activity. The regeneration of biological resources will be recorded as gross fixed capital formation, and we'll also be introducing depletion into the calculation of transactions associated with biological resources, and that will be treated as a cost of production. I'll talk more generally about depletion in the next slide. There'll also be clarifications regarding the measurement of work in progress. Again, these changes probably sound scarier than they actually are. They're likely to have only a minor impact on GDP and no impact at all on net worth, because there will be only shifts between non-produced and produced assets and between work in progress and underlying assets. So I mentioned depletion, that it will be recorded as a cost of production in the 2025 SNA, which contrasts to the 2008 SNA, where depletion of natural resources is treated as another change in the volume of assets. Treating depletion as a cost of production brings it, if you like, to the same level as depreciation in the system. So when we calculate net domestic product going forth, it will equal gross domestic product less depreciation less depletion. So the definition of NDP will change somewhat to bring depletion into account. And as you could imagine, in naturally resource-rich countries, this will have an impact on NDP. But because we're talking about depletion on the same level as depreciation, this change has no impact on GDP. While on the topic of natural resources, talk now about the proposal to introduce the split asset approach for natural resources. In the 2008 SNA, natural resources are recorded in their entirety in the accounts of the legal owner, and in most countries that is typically the government. However, investigations have shown that when a government leases the mineral resources or whatever to an extractor, and the extractor is able to extract those resources and sell them, then the governments collect royalties, as we know, on those arrangements. But in a number of instances, the value of the royalties that they collect could be substantially less than the full value of the economic rent associated with those natural resources, and the natural resources in their entirety are valued on the basis of their economic rent. So that led to a decision to split the natural resources between the legal owner and the extractor, according to the shares that each have of the resource rents. The issue of depletion is obviously relevant for these resources as well, and it will be accounted for, and that will be done in line with the recommendations in the CS Central framework of 2012, where depletion will be allocated in line with the appropriation of the resource rents by adjusting the rents paid by the extractor to the legal owner. When there are changes of ownership in these natural resources, so for example, a government enables a new lease arrangement to be entered into, these will be recorded as other changes of volume of assets and not as transactions. This change does not have any impact on GDP or NDP and net worth. It only changes the allocation of the relevant assets across sectors. Turning now to the sum of cost method, and that method is used, as we know, in the absence of market prices to value assets and transactions as an approximation for such market prices. In the 2008 SNA, when we're talking about output for own use for market producers, the sum of cost method includes the elements that are shown on the screen: intermediate consumption, compensation of employees, consumption of fixed capital, which, as I said, is now known as depreciation, a net return to fixed capital, and other taxes less subsidies on production. And there are four issues that have come to light in relation to that 2008 SNA treatment of the sum of cost method. The first, for non-market producers, the relevant output is valued not using the same formula as for market producers, but with a somewhat different formula where the return to fixed capital is excluded. Secondly, there is a return to fixed capital, but there is no return to capital included in the formula for non-financial assets. Thirdly, there's an issue that arose as to whether payments for rent on, for example, land and natural resources that are used in own account production should be included or excluded. And likewise, now that depletion is entering the system as a transaction, should that be included or excluded in the formula along with consumption of fixed capital? So considering those issues, the following proposals were made. Firstly, all relevant output will be valued, including a return to capital, which will bring the formula for non-market producers in line to the formula for market producers. Importantly, this does not make non-market producers profit entities. Rather, it just recognises that there's a cost associated with capital for both market and non-market producers that should be included in the valuation of this output. There will be an inclusion of a return to non-financial assets other than fixed assets, which therefore includes inventories and non-produced non-financial assets. However, there won't be a return needed for city parks and historical monuments on the basis of pragmatic grounds, because very few countries, if any, include those in their balance sheets, and one would be, I think, struggling to think of too many instances where there would be own account production that involve the city parks or historical monuments anyway. Rent for the use of non-produced non-financial assets will be shown as an additional cost element, and depletion, where relevant, will also be included. I say where relevant because we cannot think of too many instances where depletion would actually be a factor in own account production of output, but by chance that it might be in some obscure instance, it will be included as part of the formula. The change is likely to have a significant impact on GDP, but a more moderate impact on net worth. The next conceptual change to the SNA relates to the measurement of the output of central banks. In the 2008 SNA, in regard to central banks, the possibility of FISM, that's financial intermediation services indirectly measured, the possibility of the central banks having FISM is mentioned. And there are two types of services mentioned that are provided by central banks: monetary policy services, which are treated as non-market output, and supervisory services, which are treated as either non-market or market, depending on the extent of fees that are paid for these services. And the non-market output of central banks is allocated to government, with a concomitant current transfer back to the central bank. The 2025 SNA will make a number of changes to that. Firstly, FISM will be excluded on conceptual grounds on the basis that central banks typically aren't financial intermediaries, so it would be inappropriate to measure FISM. Secondly, there will be a recognition of further services that are provided by the central bank, including the promotion of financial stability and the monitoring of the payment system. Thirdly, all output of the central bank will be considered as non-market output, and any payments by financial corporations will be considered as current transfers, and output will be recorded not as consumption by the government, but as output for own final use by the central bank. This will have a minor impact on GDP, and that's due to the treatment of payments by financial corporations as current transfers rather than as fees for services. So when they're treated as fees for services, they're deducted from the value of output to get value added. Obviously, if they're treated as transfers, they're not. So the value added of financial corporations will increase somewhat by treating these payments associated with regulatory services as transfers rather than as fees for services. There's a couple of other relatively minor conceptual changes that will be made to the 2008 SNA. None of these have any impact on GDP or net worth, but they do have impact on some of the other items in the system. Firstly, in regard to dividends of foreign direct investment enterprises, up until now they've been limited to the current period's operating profits. Going forward, they'll be able to be paid out of previous periods' operating profits as well. The reason that this doesn't have an impact on any high-level aggregates is because we record retained earnings for FDI enterprises. So the change of treatment of dividends for these enterprises will be completely offset by a change in the value of the reinvested earnings of these enterprises. There will be an extension of the definition of rent to include all non-produced non-financial assets other than natural resources. The 2008 limits rent to natural resources. There will be a recording of work in progress of fixed assets that are partially transferred and fixed assets produced for own final use. So this will just shift some activity from gross fixed capital formation to work in progress, but have no impact on the total value of assets. Limitation in terms of the treatment of concessional loans to those that are provided by employers to employees. All equity in international organisations will be considered as other equity, and securities provided by collateral when this is provided by central banks, which are not readily available for meeting balance of payments financing needs, are to be excluded from the cash borrowers reserve assets. And this means for gold swaps, there will be a reclassification of gold and a demonetisation of the gold bullion that underpins these the collateral that are provided for these securities, because they are no longer available for meeting balance of payments financing needs. That change actually impacts the balance of payments more than it does the SNA. Okay, so that's a summary of the conceptual changes that will be made. I'll now briefly talk on the recommendations for additional tables and data items. But before I do that, I'd like to make a few general observations. Firstly, we can distinguish between the following tables and data items in the system. Firstly, we have what was called the sequence of economic accounts, and it is the standard set of accounts and tables, and the compilation of that is obviously recommended. Associated with the system of the sequence of economic accounts is a range of supplementary tables and items, and there are also additional tables that are articulated in the system. Some of these are called extended tables. That's where change the production boundary or the asset boundary of the SNA. As I said, they're akin to the old satellite tables. And thematic accounts is where you take a deep dive into a particular aspect of the economy in tables such as, for example, tables on the tourism activity, which historically have been known as tourism satellite accounts. Importantly, the SNA does not have the power of law, so it cannot tell countries what to compile and what not to compile. But one of the main factors of the success of the SNA is that it's enabled the worldwide compilation of statistics according to its conceptual guidance on a standard basis. So, statistics can be compared from one country to the next. So, what one country produces a table associated with a particular aspect of the national accounts, and another country produces the same table, then we know that the statistics in those tables are compiled on a similar basis, and therefore they're comparable. As I said, the objective is that as many countries as possible compile the sequence of economic accounts. That's the production accounts, the income accounts, the capital accounts, the finance accounts, and the balance sheets. But the supplementary tables and items and the extended and thematic accounts and tables, they're encouraged on the basis of what the national and regional priorities are. So if, for example, I talked about marketing assets as an example of an extended account. So if this is something that's important to a country, then that country is encouraged to compile these accounts based on the guidelines that are provided within the SNA. So with those general comments, I'll step through the specific proposals in the 2025 SNA. Firstly, in regard to accounting for wellbeing, in order to have an improved analysis of the distribution of income, consumption, saving and wealth across households, there will be a standard breakdown within the sequence of economic accounts of households by income and wealth decile. And there will also be more detailed labour accounts articulated in the 2025 SNA. As well as that, there will be various other breakdowns of households, such as household composition, main source of income, that will be put forward as supplementary items. And regarding extended and thematic accounts and tables, countries where relevant will be encouraged to produce accounts on unpaid household service work, education, and human capital and health. In terms of accounting for sustainability, here we want to leverage very much off the work that's done in the System of Environmental Economic Accounting, the Central Framework of 2012 and Ecosystem Accounting. These are important frameworks, and they can be seen as systematic frameworks which are complementary to and consistent with the SNA. So the SNA will encourage countries to produce statistics according to the SIA frameworks in order to better account for sustainability. In addition to that, within the sequence of economic accounts, natural capital will be shown as a separate category, and this will include both produced and non-produced non-financial assets, which fall within this broader category of natural capital. There will be more detailed environmental breakdowns of certain non-financial assets and financial assets. And while this isn't a change per se, there will be a greater focus on the estimation of natural resources. The 2008 SNA probably doesn't provide as much information as it could on how to go about estimating some of the natural resources which should be measured in the system, and more information on that will be provided in the 2025 SNA. Turning now to globalisation, to get a better understanding of the impact of globalisation on the generation and distribution of income and to improve international comparison of fiscal balances. There will be standard breakdowns of corporations into foreign controlled corporations, public corporations, and national private corporations. And of the latter, those national private corporations which are part of domestic multinational enterprises will be shown as an of which item. In addition, there will be various supplementary items and tables that countries will be encouraged to produce, included extended supply and use tables, and providing data on special purpose entities for these countries, where these entities are significant. In terms of accounting for digitalisation, we want to improve the visibility of the digital economy in the SNA. So there'll be more detailed breakdowns of certain asset categories within intellectual property products in the sequence of economic accounts. As well as that, the digital supply and use tables will be encouraged as extended tables. And there'll also be extended accounting for free services, such as those provided by Facebook, Instagram, and TikTok. Free is inverted commas there because there's no such thing as anything being free. But in these cases, the consumer of the service is not necessarily the entity that pays for the production of that service. And also there will be further breakdowns of subsectors of financial corporations of fintech-related activities as supplementary items in those countries where these activities are significant. Accounting for financial risks and vulnerabilities since the great financial crisis of 2007 and 8, it's seen as important to arrive at an improved accounting for financial risks and vulnerabilities. This relates to providing more information on non-bank financial intermediation, often known as shadow banking, through supplementary tables with more detailed breakdowns of financial corporations, as well as additional details for certain financial instruments. There will be recommended breakdowns for financial instruments, and there will also be a greater focus on from whom to whom tables as supplementary tables. They weren't included in the consolidated list of recommendations because from whom to whom tables were in the 2008 SNA, so there's nothing new in terms of these tables per se, but as I said, there will be greater focus given to them as tools for better understanding financial risk and vulnerability. In terms of other supplementary items and tables, concessional loans provided by government and international organisations be recorded as supplementary data. For reinvested earnings, I mentioned the change in treatment for foreign direct investment related dividends. This means that these dividends will be on a slightly different basis than non-FDI dividends. So because of that, the FDI-related dividends will be broken down into payments as defined for non-FDI corporations and other payments and dividends to enable a direct comparison of dividends. Importantly, reinvested earnings, which in the core system is only shown for foreign direct investment, there will be supplementary data encouraged on recording reinvested earnings for all equity in all corporations, regardless of whether it's direct or portfolio investment. For debt securities, there will be supplementary items valuing those at both the market value, which is the value in the system, and the nominal value for liability positions. And there will also be a supplementary table on provisions, and three broad categories of provisions will be identified: those that relate to financial assets, those that relate to non-financial assets, and those that don't relate to assets as all. So that's a helicopter view of the main changes. I thought I'd quickly finish up by explaining where we're going to in terms of actually preparing the updated SNA. As I mentioned, the UNSC met in late February, early March, and it considered the recommendations for the update of the 2008 SNA, and it endorsed all of those recommendations, with the exception, as I mentioned, of the capitalisation of marketing assets. So that's good news for us because it means that we now know what's going to be in the 2025 SNA, so we can continue to draft the chapters of the 2025 SNA. The initial focus of that work, which commenced last year, has been on what we call new and substantially revised chapters. There's about 16 chapters that fit into that category. And those chapters, as we draft them, are being subject to global consultation on a chapter-by-chapter basis. And I think 9 or 10 of those chapters have gone out for global consultation, and the remaining 6 or so will go out in the next few weeks. By July, we hope to have a complete draft of the 2025 SNA, which we circulated for global consultation. And there will be a 3-month period available for that global consultation. So it'll go through July. It should say June 2024. So it'll be June, July, August 2024 that will be available for global consultation. And that will include not just the new and substantially revised chapters, which will have already been subject to global consultation, but the other chapters that are not new or substantially revised, and they will be shown in the form of track changes, so people can quickly see what's changed and focus their review on that. Importantly, we recognise the need to provide guidance materials to support the implementation of the 2025 SNA. And there's a significant program of work that is going on with that. And the 2025 SNA will be submitted to next year's 2025 UNSC meeting for its endorsement, and along with that, there will be a strategy for implementing the 2025 SNA, which the UNSC will be asked to endorse. But that brings me to the end of my presentation. So I'll hand back to you now, Pino, and over to you. If you want to ask for questions, I'd be very happy to take them. Thanks.
Yeah, thank you very much, Pete. It's a huge work. Congratulations to you and all the teams and all the countries participated in global consultation. So any question from the participants? We started with 35. Now we have 43 participants from the Asia region. Any question from the participants? It's a great opportunity for us. We are with the update project manager.
Someone raised the hand, Pina.
Yes, great. Heidi.
Yeah.
Yeah, hello. Yes.
Yeah.
From which country? From
Indonesia. Yeah.
Yes, please.
Thank you very much. I think it's quite a comprehensive presentation. Thank you very much for that. But I have one question about the sum of cost method. In the calculation of sum of cost method. It is other taxes on production is included instead of taxes on product. Because I think that taxes on product is the only tax that follow the rhythm of sales of output as well as other components of some of cost method. I just want to know the reason. Thank you very much.
So the reason for that is consistency in terms of the way GDP is valued, because it includes taxes on products, less subsidies. So we want to include those explicitly in the summer cost approach. Thanks.
Any other question? Yeah, maybe I can ask a question. Yesterday, Carlos said that thus far 176 economies have participated at this one of the global consultation. So you said there are revised chapters and then new chapters. Which chapters received the highest level of global consultation? And then as a project manager, what kind of discussions you had during the global consultation process?
Okay, so the global consultation has been going on for some time now. We had global consultation on all the guidance notes, which underpinned the proposals for changes to the SNA, and some of those notes attracted 100, 120 responses as part of the global consultation work. So, for example, there was one on crypto assets, which had lots of responses to it. There was another one on the valuation of imports and exports, which I think had well over 100 responses. But that said, most of them had 50, 60, 70 responses as well. And then we drafted what we called annotated outlines for the chapters that are new or substantially revised, and we sent those out for global consultation. And again, we weren't getting hundreds of comments on those, but we would get 30 or 40 comments across all of those, which were very helpful in terms of planning for the chapters. And for the chapters that have gone out for global consultation, we've probably only been getting, I don't know, 30 or 40 countries commenting on those. And I actually take that as a good sign, because it means that we've done what we said we're going to do. There's been a journey where people have been able to comment on proposals. We've had recommendations, people have been able to comment on the recommendations. There was global consultation on the consolidated list of recommendations. There were over 100 responses to that. So we've got a very transparent process, which has brought us to where we have. So I think when people see the chapters, they go, yeah, I can see why that's there, because we know that this is what's going to happen because we've been involved in the process. So we're still getting valuable feedback, but I think that it shows that that bringing along a country right through the process, I think, has been very helpful. But who knows, when we put the whole SNA out in June for global consultation, I would expect we would get 150 countries commenting on that, because it's just the size of it and the interest that there is. I hope that answers your question. Thanks.
Okay, thank you very much. Let me ask one question to the participants, and then we will proceed to the next session. It should pop up on your screen, participants. If not, please open your chat box. This is also relevant to the global consultation. The international statistical community have been working on the update the statistical standards. Have you been following or participated in any capacity in the update of the 2008 SNA? It's on the chat box. Yes, I have been following the discussion, but I have not participated. Yes, I have followed the discussions and participated in some capacity, including the global consultation. And no, I have not followed or participated in the discussions.
I'm seeing a few people have said that they haven't participated, but I think that their institution may have participated in some way, even if they personally weren't involved. But yeah.
Okay. Okay.
Yeah,
Yes,
right.
60.
So they have the opportunity to look at the chapters when they come out and participate in the consultation on that if they would like to. Yeah.
Okay. Okay. Thank you very much. Now we will proceed to the 2025 SNA financial issues session. Francine Berry from IMF Statistics Department, working as an economist. Francine, floor is yours.
Thanks, Pinar, and thanks, Peter, for your presentation. Just allow me 1 minute to share my screen. Okay. So thanks and a good afternoon and good morning to everyone.
It would be great if you put on the slide mode.
Yes.
Great, thank you.
As Pinar indicated, my name is Francine Berry and I'm an economist in the IMF Statistics Department in the Real Sector Division. So my presentation today is on the financial issues that are covered or adjusted or updated in the 2025 SNA. So the 2025 SNA, as you would have heard from some of what Peter just said, some of the issues that have been updated in the 2025 SNA relates to financial issues, financial corporation sector, financial instruments, and the elaboration of the from whom to whom tables in the 2025 SNA. Most of these changes or inclusions, additions, etc., are not fundamental conceptual changes, but sometimes some of them are clarifications, elaborations of maybe sectors or instrument categories and types, or maybe providing more clarification on issues that were addressed in the 2008 SNA. So the changes in the updated SNA on financial issues span a number of chapters, but primarily they are covered in chapters 29, 25, and 37, which cover issues on financial corporation sector, financial instruments, and elaboration of the from whom to whom tables. On chapter 29, the updated SNA 2025 SNA, this is a new chapter that will include part of what was measured in the 2008 SNA chapter 4, which covers now covers institutional units and sectors, and chapter 21, which measures which looks at measuring corporate activity. So the information that this chapter will contain will look at expanding the 2008 SNA discussion on production account, and it will include some of the discussion that is now in the UN Handbook on Financial Production. Specifically, it will touch on issues relating to measuring financial corporations' output and better elaborate this in the 2025 SNA. It looks at, the new chapter will look at a review of financial sectors and subsectors, including concise information and data sources and different corporate ownership structures. So specifically, the 2025 SNA financial corporation sector the 2025 SNA will elaborate more the financial corporation sector and subsectors, and look into issues such as sectorizing the financial corporation sector to look at domestically controlled or financial corporation sector, foreign controlled financial corporation sector, and of the foreign control, it will likely break out what are SPEs And for the domestically controlled, there will be an option, an off-which option to look at more detailed issues such as those corporations that are part of M&E structure. The chapter will also speak about the non-bank financial intermediaries or financial or shadow banking, and so it looks more on detailing the financial corporation sector again, to have more discussions or place more emphasis on these types of institutions, and the analysis will show and providing analysis on how it's important to track the data recorded by these non-bank financial intermediaries for financial analysis of an economy. The 2025 SNA Chapter 29 will also speak about monetary and financial issues, but the importance there is that there is an alignment with the Monetary and Financial Statistics Manual. As we've been mentioning throughout the entire process, throughout this update process, we've had individuals from all the different domains to ensure consistency of the recommendations between the SNA, the BOP, the GFSM, and the Monetary and Financial Statistics. So what we are seeing is now more alignment between what is discussed on financial issues in the SNA and the Monetary and Financial Statistics Manual. So the section on financial corporations and financial activity, this section in the 2025 SNA will discuss the role, diversity and growth of financial corporations. An important discussion that will be covered by the manual is the impact of technological innovations on the financial industry. And specifically, we are speaking of incorporating or integrating financial technology companies or fintech entities into the existing framework. I think this was where this discussion is closely aligned with the chapter on digitalization, and we discussed that in the digitalization session yesterday, where we said in the updated SNA, we cover fintech corporations, but we do not include any new sectors or subsectors. What the 2025 SNA suggests is that fintech companies will be recorded in the existing SNA framework or in the proposed framework. So insurtech companies will be covered under the insurance pension subsector. Fintech corporations that deal with real estate will be covered under that specific subsector. Fintech companies that deal with, let's say, banking, etc., will be covered in the relevant subsector in the existing framework. So we're not adding any additional subsectors specifically to cover fintech companies. The relationship, the chapter also speaks on the relationship of SNA sectors with the nationality-based statistics, covering issues such as residency and consolidation. And as I mentioned in the previous slide, there is this new off-which breakdown of financial corporation sector and subsectors by control. So in the updated SNA, both the financial and non-financial corporation sector will be broken down into domestically controlled financial corporations and foreign controlled financial corporations. And from there, you'll have further breakdown to provide data on domestically controlled financial corporations, which are part of multinational enterprise structures, and for foreign control corporations, which are part of multinational enterprise structures, and also SPEs. The chapter will also, as I discussed, review and detail the subsectors of financial corporation and provide more detail on financial intermediaries and auxiliaries, including analyses and of these entities and their functions. For each of the main subsectors of financial corporations, the chapter will discuss the definitions and key activities of these sectors and subsectors, any subcomponents, and discuss issues such as source data and other national accounts measurement considerations. One specific issue that is covered by the Financial Corporation's discussion in the updated SNA is the issue of non-bank financial intermediation. So since the financial crisis, we all know there's been much more emphasis on intermediation that is occurring outside of the regular banking system. And in these non-bank financial intermediaries. For the SNA, non-bank financial intermediaries comprise of non-depository financial intermediaries. So any non-deposit taking corporation that are acting as banks or what we call shadow banks. So under the Data Gaps Initiative, which was established out of the financial crisis or following the financial crisis, the international expert group developed a framework for further sectorizing the financial corporation sector, which includes breaking down these financial corporation sectors and subsectors into more details, further elaborating the entire financial system with an emphasis on pinpointing activities that are occurring in the non-bank financial intermediary entities. So in the new in the updated SNA, this will become a part of this level of detail, or this more elaborated financial corporation sector will become the new structure of the financial corporation sector. And it will focus on issues like breaking down the insurance sector to focus on life and non-life subsectors. The pension fund sector or subsector is further broken down into defined benefit and defined contribution schemes. Money market funds are broken down to show net asset value money market funds and variable NAV money market funds, and the non-money market funds are further broken down into various types of non-money market funds. And there is a supplementary breakdown for captive financial corporations and also special purpose entities, as I just discussed. So in the updated SNA, there is also greater links to the monetary and financial statistics. So the SNA financial corporation sector and subsectors are closely tied to the monetary and financial statistics. And so as I discussed, the updated SNA was all these changes in the updated SNA were discussed very closely with colleagues from the monetary and financial statistics domains. And so these two, the update process for the SNA is very closely tied to the updated MFSM manual. And this section on the links to monetary and financial statistics replaced part of the 2008 SNA Chapter 27 that already discussed links to monetary statistics and flow of funds. The discussion under this chapter will include sectoring issues, sequence of accounts, coverage and classification of financial instruments, as well as any conceptual differences pertaining to specific instruments. So the next chapter that is, or the next main chapter that covers financial instruments, updated discussions on financial instruments in the 2025 SNA is chapter 25. And this chapter will include part of what was covered in the 2008 SNA chapter 17 on cross-cutting issues. And it will provide additional discussion on specific instruments such as standardized guarantees, financial derivatives, employee stock options, and more details on recording the flows associated with some financial assets and liabilities. On the treatment of standardized guarantees, there are no material conceptual issues. However, the chapter further discuss the standardized guarantees, including providing examples, more details, and one important update is that to enhance the interpretability of what is written, the discussion on standardized guarantees, they provide an additional numerical example or more numerical examples. On the discussion on financial derivatives, there's a more expanded discussion on financial derivatives that cover the different classification of financial derivatives. They add more details on the types of derivatives than currently exist in the 2008 SNA. They add examples and how to classify, and they go into a bit of a discussion on the functions of derivatives, uses, as well as discussing derivatives by market risk types, etc. And this chapter is one of the chapters that's now available on the ISWGNA website. The chapter also goes into a discussion on employee stock options. Notably, there's no change in the guidance, except to note that by the new classification structure for derivatives, the employee stock options are treated as equity instruments, and the chapter goes into a short numerical example to provide further clarity on employee stock options and the treatment. There is also a discussion on other topics like loan provisions, write-offs, allowances, etc. There is an expanded discussion on loans. The chapter goes into discussion on provisions and the treatment, etc., distinguishing general and specific provisions and distinguishing provisions from actual write-offs. And the rest of the chapter is focused on detailing how to record certain flows associated with financial assets and liabilities. So it goes into some discussion for each financial instrument on how to record the transactions as well as other changes in the volume of assets. And the starting point for this section was part 4 of SNA chapter 14. The outline of the chapter may have changed, but the actual chapter is on the SNA website. On the from whom to whom tables, chapter 37. So this chapter is related to the previous chapter 27 in the 2008 SNA, where the chapter discusses the from whom to whom tables and the importance of from whom to whom tables in financial analysis. It discusses the dimensions, the instruments and the counterparties, the sectors, etc., of the relevant components of the sequence of account sector accounts, as well as detailing the importance of this chapter and related financial indicators that are derived from the from whom to whom tables that are not necessarily elaborated in the normal sequence of account structure. So the first section of the chapter will discuss the from whom to whom tables that display financial instruments in one dimension and the related sectors. And for each instrument and each sector, this can be further elaborated to show how the assets and liabilities of particular institutional sector with relation to a particular financial instrument changes over time. The chapter goes into a discussion on interconnectedness amongst the various institutional sector and a discussion of the key from whom to whom data sources, how to adjust data sources if you do not have direct sources for instruments or a sector, and how to use counterparty data. And one example of adjusting data sources or using other data sources is the discussion on security by security databases, how to use these if you have them in your country to compile specific instrument categories for the from whom to whom tables. The chapter also provides an overview of the main sectoral table structure and how to derive from whom to whom tables. As I just said, it includes some of the underlying key data sources of the from whom to whom tables and some of the indicators and the uses of these financial indicators that can be derived from the from whom to whom tables. These indicators can shed light on financial risk and vulnerabilities, and they will be in the from whom to whom discussion also include the non-financial accounts, the financial accounts, and the balance sheet, so the entire sequence of accounts. Just one note that the non-financial accounts are relatively new addition to the from whom to whom tables. However, they are closely linked to the financial accounts and balance sheet, and overall, their construction can provide an additional for additional details on relevant items and provide more details on for analysis of financial stability and overall economic analysis. So further on the from whom to whom tables in chapter 37, the financial account from whom to whom tables highlight the details of, for example, new issues of loans, debt securities, equities, investment fund shares, etc., as well as borrowing via these other instruments. So effectively, the from whom to whom tables detail, it's basically a matrix that detail how one institutional sector of the economy is relating to other institutional sectors of the economy. So you have the assets and liabilities of each institutional sector, along with the counterparty holders of those assets and liabilities. And the tables are elaborated by instruments, financial instruments, that and the overall it shows you an overall balance, as it says, from whom to whom, who is the holder of which asset and which sector is the counterparty holder of the liability. And the balance sheet from of the from whom to whom tables highlight the stock positions and the interrelationship across the various institutional sectors of the economy. So this is one more detailed discussion that's in the 2025 SNA, because the 2008 SNA discussed generally on flow of funds, but it didn't go into details on the from whom to whom tables. So this is one new addition to the updated 2025 SNA. The chapter also goes into detail, apart from the construction of the from whom to whom tables, understanding of the various economic indicators that can be derived from the tables, how to structure the tables by instruments, by institutional sector, and show the the interconnectedness between each sector based on their holdings of which instrument and the counterparty holders of the instrument. The chapter also goes into detail on the analytical usefulness of the from whom to whom tables. They provide more, they discuss how the tables can provide more granular information that allows the user or the macroeconomic analyst to identify debtor-creditor relationships amongst institutional sector. So who is interacting, which sector is interacting with the other sectors, in which instruments, in what amount, and how these are changing over time. In addition, a summary, the chapter also provides a summary of the sectoral risks and vulnerabilities. So, for example, what is the household the household sector, how much is the household sector borrowing from the financial corporation sector, or how much is the non-financial corporation sector borrowing from external sector? What are the risks of these of having these positions? How long are they sustained, and how these relate to other activities going on in the economy, like what's happening in the market for interest rates, etc., and how these risks can be transmitted to other sectors. So what happens if there's an external shock and the non-financial corporation sector is over leveraged to the external sector? What will happen to the economy, etc.? So it goes into that type of financial analysis. It goes into other uses of the from whom to whom tables, such as I just said, financial stability analysis, but also monetary analysis, and specifically on transmission of shocks from one part of the economy to the other part of the economy by looking at how interrelated the economic institutional sectors are, and what their positions in various assets and liabilities are with respect to each other. So that is the end of my presentation. It is only a brief overview of some of the main changes coming in the 2025 SNA on financial issues. Basically, just as a summary, some of the main changes are more elaborated financial corporation sector to focus on foreign controlled financial corporations versus domestically controlled financial corporations, and breaking down those domestically and foreign controlled corporations to further show how focus on M&Es and SPEs. And there is greater breakdown of the financial instruments into much more detail or much more disaggregated financial instruments categories. Specifically, there is a focus on non-bank financial intermediation and ensuring that the financial corporation sector and the financial instruments details are disaggregated enough to show what's happening with non-bank financial intermediation. There is a discussion on fintechs and the treatment of fintechs in the updated SNA. And there is also the inclusion of the discussion on the from whom to whom tables. Thank you. And I'm happy to take any questions.
Yeah. Thank you very much, Francine. Thank you very much. Any questions to Francine? Any question? I see friends from government officials from Malaysia, Turkey, Pakistan, Indonesia. Any question? Please raise your digital hand or post your question on the chat box. From Philippines, any question? Okay, no pressure. I have a question. You said that there will be some numerical examples regarding the financial derivatives and then employee stock options. Will it be in the manual or the compilation guide?
In the manual, in the actual chapter, there are numerical examples on employee stock options and also expanded discussions on employee stock options, and also standardized guarantee schemes and the financial derivatives. And the section on financial derivatives has been further elaborated to show the financial derivatives by type. In the previous SNA, it was only on forwards and futures and a brief discussion, but it's more elaborated in this new chapter to provide a discussion on by type and also on market risk, and provide examples.
Yeah, great. Thank you. Thank you. Last chance, any question on financial issues? Okay. Okay. Now it's time to give a break. We will meet again after 10 minutes. Okay. Thank you very much, all speakers, participants. We are meeting again after 10 minutes. Hello, welcome back to the second part of the webinar. Good morning, Richard Wild.
Hi, Pina, how are you?
Thank you very much. How are you? Thank you for joining.
Thank you.
Thank you. We will continue with 2025 SNA Wellbeing and Sustainability by Richard Wild, Senior Economist, IMF Statistics Department. Yeah, over to you.
Thank you, Pina. Okay, good day, good morning, good afternoon to everyone. Let me just take a minute to share my screen.
Yes, great.
Okay, you can see my shared screen?
Yes.
Okay, great. So let me start. So thank you for the introduction, Pina. So as you said, I'm an economist in the IMF Statistics Department in the Real Sector Division. I work alongside Francine, who just presented earlier. And my specific involvement in the SNA 25 updates has been to be part of one of the Wellbeing and Sustainability Task Team subgroups on labour, education and human capital. So that's an area that I'm sort of the most familiar with within this presentation. But the presentation will cover various aspects of wellbeing sustainability to be included in SNA 25. So let me just move on. So firstly, I'm just going to cover a little bit of background on history of GDP and wellbeing, and then on the new chapters, a summary of the new chapters in the SNA 2025. Then I'm going to move on to concepts and SNA limitations in terms of measurement. Then we'll move on to having a look at existing SNA indicators that are already in, SNA 2008 that are relevant to wellbeing and sustainability. And then the last two sections will look at the core updates that are going to be included in SNA 25, and then beyond that, some encouraged breakdowns and extensions. So firstly, just as a bit of background, GDP has been institutionalized as a standard measure of economic performance for over 70 years. Many of us are familiar with the debate about whether GDP is a good or bad indicator of things beyond the economy, how well a country is doing, how happy and healthy its people are. This debate's been going on since the beginning of the national accounts. We offer expert advice to the contrary. We caution about certain uses of GDP and its limitations, but still, there's this assumption that the national accounts is basically GDP. The GDP is a weak measure of well-being, and hence that the system of national accounts has little to offer in this regard. But it does have it offers support to wellbeing and sustainability in two ways. We have some existing national accounts aggregates that we can use as inputs to wellbeing and sustainability analysis. So, for example, measures of income, measures of consumption, savings, net worth. And secondly, where the SNA doesn't measure things directly, we can still adopt SNA accounting rules and structures so that we could organize the social data and environmental data in ways that allow a sort of a consistent analysis and linkages between the core system of national accounts and these extended, these esoteric, these additional measures. So we can tie these things together. We can use accounting principles, and that's something that's been done in various areas over the past decades already. But SNA 25 is going to go one step further in recommending how to bring those together. So in terms of the structural background for the SNA 25, there are three chapters of notes. There's chapter 2, which provides an overview of the national accounts and measures of wellbeing and sustainability. And then we have Two other chapters, chapter 34, which covers well-being, and chapter 35, which covers sustainability. So those are the ones that go into much more detail. So a few key points. There's a recognition that the approaches to accounting for aspects of well-being are not all at the same level. Some of the concepts are evolving, they're defined in different ways, and they're developmental. So on that basis, these chapters aren't necessarily prescriptive in many aspects. They are discussive, they make recommendations, they draw linkages, and they really act as a springboard, as a starting point. Certainly for the extended analyses, they offer a starting point for countries to begin looking at how they can create new analysis and link them into the main aggregates. A couple of other things to note. If you look at the UN AEG website or the ISWGNA website, you can see under the research agenda link, under wellbeing and sustainability task team link, there are 14 guidance notes that have been written that underpin these changes. So those are available to see. At this stage, there are drafts available for chapters 2 and 34, and you can also see those on the UN AG page. But chapter 35 at the moment only has an annotated outline. That's not yet available. And I guess a last point, yeah, once we get to the later chapters of these large manuals in the SNA, there's sometimes a feeling that they are on a need-to-know basis, that they're not part of the core accounts. In a sense, that's true, but these you know, please do take time to read these when they come out. They provide a lot of information and the basis for a lot of good debate and analysis. So let's look at the concepts involved in the SNA's limitations. Well-being and sustainability can be sort of broadly defined in different ways. The chapters do not really give definitive versions of what well-being is, what sustainability is, again, because these concepts can be defined in somewhat different ways. But in general, well-being covers the material well-being of households. It's impacted by education, health, labor, wealth, social factors, environmental factors, freedom, and so on. Sustainability covers the ability to satisfy the needs of the present without impacting on the needs of future generations. So this implies that there's a time dimension, and that then implies that we need an accounting framework. And as per other aspects of the SNA, we need to look at stocks, we need to look at flows of different kinds of capital, human capital, environmental capital, social capital, alongside economic capital. By using accounting approach, we can sort of circumvent these challenges by putting together a set of indicators on a composite basis based on core dimensions, with variations, but based on core dimensions that provide a coherent connection between these different approaches. The SNA doesn't capture everything in terms of human stocks and flows, environmental stocks and flows, but we can exploit linkages, and some of these are already well established. You know, environmental accounts, the system of economic and environmental accounts, the accounts for education, accounts for health that already exist, and we can use those to derive new measures to create these new extended accounts and further breakdowns. A couple of other points to note. I think, as I said at the beginning, it's really, these chapters are discussive. They're not there to explain exactly what should be measured, but they do set out some core guidance to act as a basis for additional analyses going forward, so that we can measure these extended accounts coherently in comprehensive ways, and ideally, you know, in ways that are comparable across country. So I said the SNA doesn't measure everything. SNA aggregates only measure part of well-being. They measure outputs from production. They don't measure outcomes. So, for example, we could measure food production and consumption, but it doesn't tell us the outcomes of undereating or overeating. The SNA doesn't cover subjective well-being, so we can look at objective measures like income and wealth and so on. It doesn't cover subjective aspects, self-reported well-being, self-reported happiness, spiritual or environmental preferences that impact on well-being. The SNA includes defensive expenditures. It excludes externalities, and both of these affect well-being. So defensive expenditures are those that are made to mitigate against certain disasters or an epidemic. Let's say, if there's increased expenditure on healthcare and immunization following some sort of health epidemic, GDP goes up even though people are worse off. So there are counterintuitive impacts. There's not necessarily a direct link between increased expenditure and well-being, and we can have positive and negative externalities. So again, the relationships can go in both directions. SNA records exchange values, not welfare values, the latter of which include consumer surplus. They internalize the value of all of those externalities. So changes in production and consumption, although they're linked to well-being, they're not a direct measure of it. The utility that we would get from consuming a particular product does not necessarily equal the change in our change in well-being. In a market economy, prices reflect cost of production and relative benefits or utilities to be derived from using those products for either production and consumption. So the connection is there between aggregate production and consumption and changes in well-being. However, the changes in the level of consumption, the volume of consumption, are not the same as the changes in well-being, and changes in well-being are certainly not necessarily proportionate to increases in expenditure. And lastly, the expenditure may be incurred by a unit, by a person, by an enterprise that's not the ultimate consumer or user of that product. So there are linkages, but they're not necessarily clear or direct. So let's move on to indicators of relevance that are already in the SNA. We have measures of income and consumption, and we have measures of wealth. So looking at income and consumption, we have disposable income and adjusted disposable income, including net social transfers. Those are key indicators. Household final consumption, household actual final consumption are two more. Measures of financial wealth or overall wealth are other useful measures. We have to take account of a few aspects. So, the focus is obviously on households. We've got to consider changes in the mix of products being consumed, the types of income that households are earning. If we think about, actual household final consumption to include these to include the services provided by the non-market sector on an individual basis, that's a broad measure of household consumption. But we also have to consider, from a well-being perspective, that households are benefiting from the provision of collective services, street lighting, defence, and so on. And as per other measures, we have to think about prices, and we have to think about volume estimation to look at well-being trends over time on a consistent basis. In terms of wealth, we have to consider changes in the mix of assets. So, a key asset for households is going to be, focusing on the housing stock, the value of dwellings, the value of land, the largest assets that households own. Another thing to consider, within the national accounts, consumer durables are part of household final consumption. Again, thinking about the sustainability aspect of well-being and sustainability, consumer durables form part of wealth in that in that context. So that's another aspect to consider. Other things to note, we were interested in real terms, per capita measures. There are other assets outside the SNA, but they can be included to form comprehensive measures of wealth. So I talked a few slides ago about these different stocks of assets: environmental, human, social. So we can determine different asset boundaries within these extended accounts to account for those. But again, thinking about sort of the collective nature of collective benefits that affect households, we've also got to think about public infrastructure, the impact of roads, schools, hospitals, and so on, which will also impact on household well-being. So also within the SNA, we do have some measures of environmental accounts. Lots of these updates do relate to, that I'm going to come to, relate to environmental accounting. We do cover some of these things already in the SNA 2008. While the SEA provides the most detailed framework, in the SNA at the moment, we have asset stocks and flows of owned natural assets, economically owned natural assets. So we include resource rents, other changes in value, non-transactional changes in value, non-transactional changes in volume. So positive things like mineral discoveries, or the depletion of natural resources, those are included at the moment. The idea is really that in the SNA 25, although we're including some of these measures, some of the stocks and flows are basically in the wrong place for us to understand more clearly production, consumption, and accumulation processes and decisions. Lastly, we also include some environmental expenditures, and of course we include environmental taxes and subsidies. So there's quite a lot there already, but there's more to be added. So sticking with environmental accounts, these are the core updates that are going to be included, are driven by SEA principles, and they include the inclusion of stocks and flows of renewable energy resources, so a revised asset boundary. Some of these Peter discussed in the overview lecture at the beginning. So renewable energy is going to include energy from moving air and water, from geothermal heat sources, solar radiation, and a new asset class is going to be created, and those assets will be split between government and market producers using net present value of future income streams to value the asset. That ties in to the next point. Again, this was mentioned briefly in the overview. So there's going to be a revised approach to measuring natural resource rents called the split asset approach. This will allow us to split the economic ownership of natural resources between government and between other sectors, the market sector, but possibly the household sector as well. We measure revenue less costs using a standardized SEA calculation. Then again, we've used net present value to value the total natural resource asset. And then we'd consider the flows to government, the royalties, the taxes, and so on. And what's left within that calculation is the resource rent that's accruing to market producers or to other sectors as well. And the decision is that there'll be shared economic ownership, and it's going to be recorded as other changes in volume of assets rather than as capital transfers in each of those sectors. Depletion of natural resources is going to be recorded as a cost of production, as you've heard. It's important, presently value added generated from the sale of non-renewable natural resources ignores the fact that it has a finite supply. It's akin to depreciation of produced non-financial assets, being a cost of production already. And again, as Peter said, yeah, net domestic product is going to be affected, particularly in countries that are dominated by non-renewable production of products from non-renewable resources. Next, there's going to be a clarification of the production boundary for biological resources. So, the present SNA has a distinction between cultivated and uncultivated resources. This the SNA 25 is going to clarify that. There's going to be a separate asset class proposed for these resources, and uncultivated resource stock changes are no longer going to be part of other changes in the volume of assets, but instead they're either going to be part of production, or there's going to be an associated property income where there's some control or management being exercised. And then lastly, there's going to be clarification on emission trading schemes. The idea is that the atmosphere is an asset, and various options were discussed to record what ostensibly looked like something that has aspects of being a tax or of being a resource rent payment. So the decision is that these things are going to be recorded, the permits are going to be recorded as financial assets, with the tax on production recorded at surrender. Also mentioned, so as well as these trading schemes, there's an update on recording of provisions. So provisions cover things like terminal costs of disassembling capital associated with oil exploration, gas exploration, let's say, or funds that are set aside for expected compensation payouts. There's going to be clarified guidance on that, and ideally a separate table showing the value of provisions. So what else is core? There's going to be an extension to the production boundary to include some unpaid household labour. So we have something called the third-party criterion. That is, if the work within a household or between households could be performed by another person or persons, then it's going to be included. So autonomic type activities, sleeping, eating, and so on and so forth are not included, but things like caring, cooking, transport, laundry services, household management, shopping, and so on will be included within the production boundary. The rationale is very similar to the one that underpins the inclusion of owner-occupied housing services and domestic services, in that the inclusion of these services prevents distortions in level and growth when there are switches between self-provision and market provision. The minimum recommendation for these activities is to be measured periodically. There's an additional element of productive activity in the supply and use tables. They require, in terms of measurement, valuation requires time use information and appropriate market sector wage rates, but this will be part of the core accounts. And just one, because we're mentioning wages at this stage, it's not covered in this lecture, labour accounts will form a new core element of the 2025 SNA, so that wage information will be there to assist in measurement of unpaid household labour. The labour accounts are going to sit between current Chapter 9 on the use of income and the current Chapter 10 on capital accounts. So those are the core additions to the SNA 25. I'm going to talk through the encouraged breakdowns and extensions now. So firstly, distributional accounts, and actually Peter clarified at the beginning, there will be a standard core breakdown household income consumption worth by income decile, but many further breakdowns are possible and are encouraged as per national priorities and capabilities, including, of course, the ability to measure these things in different ways using granular data. Breakdowns, distributional breakdowns by education status, by health status, and so on. Also, breakdowns we could look at gender, we could look at age, education level, employment status, geography, wealth deciles, home ownership, type of employment. Many other options exist beyond the core tables that'll be included. And really, what's needed, it depends on your country, it depends on the context, it depends on the analytical questions that are being asked. Just one thing to add on this slide. So there's a sample table here showing breakdowns of household final consumption, actual final consumption by income quintile. It includes unpaid household service work, and also it includes this element ecosystem services. So if you're not familiar with that, that's described in these chapters on wellbeing and sustainability. So ecosystem services are defined as the contribution of ecosystems to benefits used in economic and other human activity, and they comprise three things. So provisioning services, the materials and energy that we can derive from the environment, regulation services, so the ecosystems regulation of climate, biological processes, and then lastly there's cultural services within ecosystem services, and those are where people derive benefit from physical settings. Okay, moving on to education and human capital. So these are recommended as to form extended accounts, so not extended accounts in addition to the core accounts of the SNA. Human capital is obviously key to well-being. It has the characteristics, many of the characteristics of an asset, but it can't be included within the SNA asset boundary in the sense that it's self-embodied, it's not transferable. You cannot give your human capital directly to someone else. You can teach somebody what you know, but you can't give them your human capital directly. But it can be considered an asset in an extended accounting framework and linked in to the SNA. And this table on the right here just kind of shows the linkages between different aspects of human capital creation and production. So education and training are key aspects feeding into human capital, although it's obviously supported by other elements, people's innate abilities, their environment, their social settings, and so on. Human capital then underpins labor. Again, it doesn't directly determine labor supply, demand, wage rates, and so on, but it's a key factor. And then labor is an input to, obviously, is an input to production. Human capital can be estimated via sort of a cost-based approach, an inputs approach, the depreciated value of all investments into education, or it can be estimated on an income approach, an output-based approach by looking at the sum of the discounted values of all future income streams. So the recommendation is to include these only in extended accounts. It's recognized that they will take a long time to implement, both within and across countries. The models themselves are quite varied and they can produce quite different outcomes. But feasible first steps for these extended accounts are for countries to consider developing cost-based measures of education and income-based measures of the human capital stock. So just another couple of points to note. We have the UNSD satellite accounts for education and training. These already exist They're well established. They're fully compatible with the SNA, and they have lots of supply and use table type frameworks showing what types of education are being provided by which sectors, government or households, and so on. So those already exist and can be linked into the SNA quite readily. And just a last point, this is something additional I just wanted quickly to say. Health accounting is also recommended as an extended account. It's key to well-being, obviously, and there's an existing standard called the System of Health Accounts 2011. It's well developed. The extended accounts for health should measure consumption of healthcare goods and services, production of healthcare goods and services, and also the financing. Similarly to education, the production and consumption aspects mean that health accounts in an extended framework can be readily presented in a supply and use type setup. So thank you very much. I'll hand back to Pina.
Yes, thank you very much, Richard. Any question from participants? Please raise your hand or put your question in the chat box. I see friends from Malaysia here, and you are compiling the government officials, statistics office Malaysia, compiling the labor accounts, and Australia from the region compiling labor accounts. So as you said, Richard, there is no proper guidance on labor accounts. Some countries in Europe are compiling labor accounts, but there is no manual on this yet. Am I right?
Yeah, but it will be core. As I said, we don't cover it in this lecture, but there is, there's a clear framework set out with 4 quadrants on measurement of persons, volumes, payments, jobs. So yeah, that does exist.
Yes, we ESCAP developed a e-learning course on introductory course on labor accounts in 2021. Apparently, it might require some review. We conducted a country course in Malaysia in 2019. Regarding the other accounts, any question from the participants? Yes, Hadi.
Thank you very much, Pina.
Thank you. Yes.
Thank you also to Richard for the amazing presentation. I'm from the national accounts, so my perspective will be from the national accounts. We know that if we talk about well-being, we are talking about what we eat and not what we buy. I think this principle is different from the national account principle. Since the national accounts is more concerned on the dynamics of the money financially. So by introducing well-being in national accounts, is it possible that it has to sacrifice some national accounts principle? Thank you.
I mean, it's the chapters. The chapters are keen to point out what the SNA can do and can't do. Even in the SNA 2025, we can measure economic well-being. We can look at objective well-being in various different ways. We can already do that. With the extensions, we can do that even more. Where is the limit of well-being? It depends on who you ask, and it depends on what they're looking at. You can have an extended account that looks at many different aspects of well-being. So those core The main extended approach is to look at, to look at education, to look at health, to include these environmental factors, to try and take account of these externalities. It's still economic in focus. Yeah, I would agree with that. But that's not to say that you're limited in what you ultimately try to link into your economic data.
Thank you.
Thank you, Heidi. There is a question on the chat box, Richard.
Is there a practical manual for estimating well-being? I guess estimating extended accounts of well-being to the SNA. No, there's not. There's a lot of literature on well-being. There's a lot of academic research on well-being, but there's not a manual per se. Again, I'd encourage you to read the chapters. Chapter 34, it is still draft, so it can and will change in some ways probably. But as I said at the beginning of the presentation, it is discussive. It's offering you a springboard. It's offering you a starting point for saying this is the framework that you can link into. These are probably the core avenues that you can analyze, but it's not prescribing exactly how you should do it. There are different ways of measuring things. So the short answer is no. Maybe in 10, 20 years, we'll have a lot of clearer guidance as countries converge if this becomes a common extended account, but at this stage, no.
Thank you very much. I don't see any further question. So thank you very much.
Thank you.
Thank you. Now we will move to the last session, to Francine Berry again, economics from IMF Statistics Department, thematic and extended accounts. Francine, over to you. Thank you.
Thank you, Pinar. Can you hear me?
Yes.
Yes, okay. Thank you for the introduction and hello again to everyone. So this is the final presentation of the session, and it is on thematic and extended accounts, as Pinar said. And if you've been at the session since yesterday and even today's session, including the previous presentation from Richard, you've been hearing the terms thematic and extended accounts throughout all of the themes that have been presented. So you've heard in yesterday's presentation that we could develop extended accounts for looking at digitalization and different views of digitalization in the accounts. Today we discussed that we could look at extended labor accounts and other accounts to understand more on well-being. And Peter also discussed some of the areas in which we are recommended extended accounts in the SNA, like in marketing assets, etc. So this presentation it's very short. It really just discusses what are extended and thematic accounts in the updated SNA, why we are doing it, and it looks at the structure of the chapter in the new SNA. So the thematic and extended accounts, what we're calling in this new SNA, is really what was previously called satellite accounts in the 2008 SNA. So as you already know, in addition to the core set of SNA tables and accounts in the main sequence of accounts, the SNA has several recommendations, both the 2008 SNA and the updated SNA, for countries to be able to produce additional information that are outside of the core set of accounts in the form of what we call supplementary accounts, or previously satellite accounts, and now we're calling these extended and thematic accounts or tables. What are these? These extended and thematic accounts are really just flexible tools that we can use as statisticians to pull out a particular phenomenon in the accounts. They are used for compiling data on a particular theme, a particular sector, etc., industry, and bringing visibility to key economic activities, key economic phenomenon, etc. They maintain the coherence with the overall conceptual framework of the SNA. And what they do is bring together pertinent data in one place. So based on what you want to see, it brings together that data. For example, if you want to look at tourism, you cannot easily disaggregate what's happening in the tourism, let's say, sector or for one economy that might be tourism driven. The policymakers might want to understand what is happening in that particular sector or industry, but it's not easy to just look at the national accounts, for example, and understand what's happening. So you might want to develop a tourism thematic account. So it brings together all that information in one place and present further disaggregation that might not readily be available in the core set of accounts. And it presents alternative aggregations and approaches, and it provides a broader context. So it allows users to get a deep dive into various aspects of the data, various aspects of the national accounts, to understand what's happening in particular areas of the economy that they might be interested in. So for topics that can be covered in a single table with a limited scope, we are recommending supplementary tables and not necessarily extended or thematic tables. So as you know, the SNA provides flexibility for economies to choose topics for thematic or extended accounts. And this is based on a number of issues, what your policymakers are interested in, what your users are interested in, what aspects of the economy you may want to study. That might be an background for choosing which thematic account you focus on. In the area of extended accounts, because these have a particular role, it might be what you want to focus on at a particular time, because extended accounts are used, as you see in the next slide, they are used more for experimental type data or expanding or testing the boundary of the SNA. So this might be a little bit different in terms of how you choose which extended accounts to compile versus which thematic account to compile. As I said, the reasons or the basis on which thematic or extended accounts you may choose to compile could be based on the economic structure, its growth pattern, the key policy issues. So what are your users, policymakers, etc., interested in? What are the key questions that as statistical offices you are asked constantly by your users? And also, what's the data availability? Because you might want to compile a thematic account on a particular area or topic, but you may not necessarily have the data to do so. So the 2025 SNA encourages extended and thematic accounts to fill important information gaps on aspects of well-being and sustainability, as you've just heard, including areas like labor account. We discussed yesterday on digital economy thematic accounts. Richard just discussed issues such as household unpaid service, health and education, and human capital extended or thematic accounts. So what's the difference between these two? Both sets of accounts provide complementary data that allow for insight into key activities or aspects of the economy that are kind of opaque or blurred in the standard sequence of accounts. So the information is there, but it's not necessarily that you can really look at the production account, for example, or income account and see exactly what you want for that particular industry or sector or segment of the economy, or even a topic. So you compile these accounts to bring visibility to key economic activities because they allow you to focus on key segments of the economy, key areas or industries, depending on the type of the economy and the type of the account that you are compiling. It allows users to analyze key phenomenon, a key phenomenon in more details. And I discussed already some examples such as tourism, health, agriculture, digitalization. And this all depends on what you are trying to explain to your users or what your users are demanding. Extended accounts, on the other hand, these are more accounts that expand or modify the production, consumption, or investment boundaries. So the thematic accounts are compiled within the existing SNA framework. They do not expand the boundaries of the framework. They are different from extended accounts in that aspect. The extended accounts are used to test new or experimental methodologies. So these are not fully concretized conceptually or methodologically. So you're creating an extended account to see what necessarily might happen if you compile a particular information for a particular segment, for example, unpaid household work, education, human capital, that we are now proposing extended accounts for, also in the same for digitalization. But the one similarity is that they're used to analyze a particular topic or segment or industry of the economy. Now, what the chapter, so this chapter is also available on the ISWGNA website. It's a very short chapter. The structure of the chapter is, it follows this presentation. It's introduction to these types of accounts, why we compile them, what they are, what are the differences between the two accounts, and it also goes into some discussion on the tools or key inputs that are used to developing a thematic or extended account. So it speaks on how you can use these supply and use tables, and adding more granular or more detailed source data depending on the segment of the economy that you're trying to study. It speaks on issues such as alternative classifications or aggregations that might be needed, rearranging the data based on the classifications that you need to compile the data for the particular industry or sub-segment of the economy to better understand and or scope the economic activity that you're trying to study. Right, so it just goes into details on this and notes that data from the standard sequence of accounts, the data from the existing macroeconomic statistics or national accounts, plus additional details from a more detailed supply and use table for that particular industry segment, etc., will combine together, will allow for deeper insights into specific economic activities. Right. So finally, the chapter goes not necessarily in details, but it provides some steps on how to compile these types of accounts. It speaks about the planning phase and the compilation phase of compiling thematic or extended accounts, which include defining precisely the economic activity or economic phenomenon that you're trying to study. Excuse me. Compiling thematic supply and use tables, disaggregating the relevant elements within the supply and use tables, and introducing where relevant complementary indicators, or rearranging or introducing additional aggregations of the data to better understand or develop your thematic and extended account. So this is a very short chapter in the updated SNA. It doesn't go into detail on step-by-step compiling. It provides one example, which will be useful for compilers who are new to developing these types of activities, and it goes through the steps on how to develop a thematic account. It gives one example of, for example, a tourism thematic account. So it would be useful for those interested to review the chapter on the ISWGNA website, and also if you have comments or questions, you can. I think the editors are still accepting comments on these chapters that are out for global consultation. But that is the end of my presentation, and I would like to thank you for your attention, and please let me know if you have additional questions.
Yes, excellent. Thank you very much, Francine. Any question on the thematic accounts? Please raise your hands or put your question in the chat box. Any question? Okay. Pete, are you here? Pete Harper?
It's my
Francine.
hand. Yes,
Sorry?
sorry. I just wanted to mention to the participants that although we did not discuss it, there is also a chapter on informal activities in the updated SNA that might be of interest as well. I am not sure if that chapter is available for consultation as yet, but we could also always check the ISWGNA website. The chapter follows the ILO guidance and provides details on measuring informal activities in the new SNA. So just for information.
Yeah, great. Thank you. Thank you. Important information. Okay, any question from the participants? Okay, then I have some questions for the participants, and then maybe we can have a discussion on this. Sorry. Actually, some countries are still in the stage of the implementation of 2008 SNA BPM 6. And will they proceed with the implementation process and considering no conceptual changes or begin transition to the 2025 SNA, or will they wait until its endorsement in 2025? What would be your recommendation?
Is that's for the participants, right?
If Pete is here, I would like to start with him. Pete, are you with us?
I think he left.
Yeah, I think he left too. He left.
Okay. Would you like to elaborate on this, Francine or Richard? Some countries are still in the process of implementing 2008 SNA. What will be your recommendation for them? So would they proceed with their implementation process or begin transition into 2025 SNA, or will they wait until its endorsement in 2025? What do you think?
Well, I can start and Richard can add. So I think the SNA will be endorsed in 2005. So there's still some time for countries to start thinking about these issues. I would recommend waiting until endorsement because there are still a few issues, as Pete discussed, that are not fully finalized, like the issue of marketing assets, etc. But at least the countries are well aware of the key issues that are coming for the update and those that have been endorsed already. So the question was whether they should wait or start implementing, or and in terms of implementation, I think, of course, it's a country-specific situation. The countries will do what's best for them and what will suit their specific compilation system. So as it was for the 2008 SNA, some countries take a step-by-step approach. They start with implementing some of the major things that would necessarily affect their economy. So some countries might start including better estimates of informal economy. Some countries might start including different things like the sectorization of financial. Oh, Sanjeev is here. The financial sector, etc. As we discussed. So I think it's a step by step. It's a case by case basis. The countries will choose which approach to take based on